everyone, my name is Emily and I'll be your hostess for the day. Today with me, I have our senior market analyst at IronFX, Peter Yosif. Hello, Peter.
Hello.
Peter, thank you so much for joining us today as we are looking at the fundamentals that are driving the markets currently. So it's a new day, it's a new week. How are the markets behaving?
Well, nothing has changed much since Friday. Actually, market worries for a possible recession are still high in the US economy. I would highlight also San Francisco Fed President Daly's comment, which she seems to be backing another 75 basis points rate hike, which practically curtails even further the chances for growth in the US economy. So we may see the worries intensifying given, I would dare to say, the hawkish stance of the Fed and its determinants to actually drain the liquidity out of the financial markets in the US.
Okay, and how about the US stock markets?
US stock markets actually are rising.
Okay.
At least were rising on Friday and during today's Asian session. That would be a sign of they're trying to recover some ground after the wide drop in the past weeks. The second interesting element would be practically that it could also imply a certain degree of optimism, which would be positive. It was also reflected in other instruments as well.
And what about the gold prices?
Gold's price, despite opening with a positive gap during today's Asian session, that was due mostly because G7 seemed to be discussing the possibility of banning or sanctioning gold imports from Russia that could practically tighten the supply for the shiny metal. Nevertheless, we still see them moving in a sideways movement. I haven't seen any decisive bullish movement in the past few days. So I would like to see how the American session opens to draw a better conclusion.
Okay, that's good. And what has been the main market mover, in your opinion, the past few days?
I would single out the Canadian dollar. The Canadian dollar actually, since Friday, has started to rise against the US dollar. It was very characteristic. I would dare to say that the CAD may have benefited on two factors. The first factor would be a more positive market sentiment, which provided some support for the loonie as a commodity currency. That would be the first. The second would be the rise of oil prices, given also that the Canadian economy is a major oil producer, and that tended to provide as well some support for the CAD.
Interesting. And how are the oil prices moving?
Well, oil prices have been rising. The question is whether the rise of oil prices is a sustainable one, or whether that's another correction and they're going to be put under pressure once again and start lowering. I would be highlighting two factors here once again. The first would be the possibility of a recession and a global economic slowdown, which may have an adverse effect on oil prices as well, given that the demand side for the commodity could weaken. The second would be practically the possibility of a new Iranian nuclear deal, which would practically reintroduce Iran as a major oil exporter to the market, to the global market, and could loosen up the supply side for the commodity, thus adding to the bearish tendencies.
Okay, and what happened with the Turkish lira?
The Turkish lira has been strengthening practically on Friday and today during the Asian session substantially against the US dollar. What happened was that the Turkish Central Bank practically issued an order whereby businesses which have more than almost 1 million in US dollars in assets, actually it's an amount of $890,000, will not be allowed to get any loans in Turkish liras.
Okay.
So that would practically force Turkish businesses which have reserves in foreign exchange to convert them into lira, practically financing the state with hard currency. However, there is a catch here. on the one hand, it looks like we are on the verge of capital controls being imposed in the Turkish economy. That's number one.
Okay.
The second is how Turkish banks are going to be reacting, because practically such a move could curtail their clientele substantially and the ability to issue loans in Turkish liras. So it's still a question, but for the time being, yes, it seems that it has been providing some support for the Turkish lira.
Interesting. And what is in the calendar today?
We have a slow calendar today, mainly in the American session.
Okay.
Where we have the durable goods orders growth rate, and that's going to be providing us with an idea of how confident US businesses actually are to invest in the US economy. That's for May. The rate is forecasted to decelerate, which is not actually good news for the US dollar.
Okay.
It could weaken the US dollar. And we also note the pending sales growth rate, that should also be for May, should slow down. We may see the bearish tendencies intensifying for the US dollar as well.
Okay, and how about the rest of the week?
For the rest of the week, I would be highlighting from the US. I would make a start with Tuesday when we get the consumer confidence of the US, which, should it drop as expected, could weaken the US dollar. On second note, I would be highlighting also the final US GDP rate. That's for quarter one. Mind you that the GDP rate of the US has been in the negatives in the preliminary releases at -1.5% quote unquote. And also bear in mind that for a recession, the definition of a recession would be 2 consecutive quarters of negative GDP rates, and most probably we'll be getting the first one on Wednesday. Other than that, I would be highlighting also from the Eurozone, actually France, Germany, and the Eurozone, the preliminary HICP rates. Those would be for June. They're expected to accelerate.
Okay.
And should they actually do so, that would be adding further pressure on the ECB to tighten its monetary policy practically on a faster pace, i.e. that would be leading to higher interest rate hikes. And last but not least, I would be also noting the final GDP rates from the UK for quarter one, and from Canada, that's on a month-to-month basis for April. Both are expected to remain rather low. Actually, the Canadian one to slow down even further and could have an adverse effect on the pound and the CAD respectively. Overall, as a general comment, I would expect the US dollar to regain some of the initiative in the forex market. And during certain moments of the week, we may see other currencies shining as well, which could more or less create a nice balanced blend of opportunities, of trading opportunities, which could keep the interest of traders alive.
Okay, perfect. Great, Peter. Thank you so much for joining us, and thank you also, guys, for joining us. Please stay tuned after our short break, again with our senior market analyst, Peter Yosif, for some technical analysis. Thank you so much.
So, welcome to the technical analysis part of the presentation for today. We make a start with the USD index. Let me readjust the levels. Sideways movement seems to continue, albeit we have to note here that there are some bearish tendencies as the price action has started to form lower lows and lower peaks. It would be more obvious if we switch to the 1-hour chart. There we go. Lower peak, lower peak, lower peak, lower peak, and so on. And if we size it up, even more obvious. 1, 2, 3, 4, downward. So a downward motion has started to form, drilling back out to the 4-hour chart, readjusting. Yet to switch our bias for sideways movement for the dollar index in favor of a bearish outlook, we would require a clear breaking of the 103.20 support line and the price action to start aiming actively for the 101.30. The breaking of the 103.20 would be a clear sign of a trend reversal in favor of the bears. Note though that the RSI indicator has moved decisively lower, below the reading of 50, actually aiming for the reading of 30, another indication for the bears, while the price action has reached the lower Bollinger Band. Mind you that the Bollinger Bands have started to widen just a bit, implying that there is a slightly increased volatility for the USD. Let's move to let's have a look at gold. So gold's price, is still moving despite the open gap, positive open gap during today's Asian session. Seems to continue to have a slightly bearish tendencies as we have lower peaks and lower troughs. It's just slightly, but nevertheless, should the downward trend line continue to dominate the precious metals price, I would expect it to break decisively below the R1 1836, which it has broken a little bit tentatively, but still has broken just above it in today's European session. Should the price action maintain a bearish movement as expected, we may see it breaking once again to the downwards, this time the 1836, and start aiming actively for the 1807. On the flip side, should there be a stabilization, given also that the RSI indicator has moved considerably higher and has broken above the reading of 50, we may see the price action of gold breaking above the downward trend line and move towards the 1870 resistance level. That would be a sign that the downward trend has been broken, and initially at least, we would switch our bearish outlook in favor of a bias for sideways movement, once again, initially at least, until the market has decided on the precious metals direction. Other than that, should the bearish movement be continued, once again, we would expect the price action of gold to break below the 1836 and start aiming for the 1807, which provided support here, here, and here. Let's have a look at US stock markets. Let's have a look at Dow Jones. Dow Jones, which has been on the rise. You can see similar movements also for S&P 500 and NASDAQ. So let's make some readjustments here to start with. Okay. Here it is. 90. In green, please. Okay. Let's readjust these two and make them into reds. Well, that could go just a bit higher. That would be the $31,955 pocket. Let's readjust this one as well. $32,760 in red. Higher than that. Final resistance line, or the third resistance line, being placed at 33,470. delete this and this. Readjusting. Second resistance label being placed at 32,760. First resistance line being at 31,955. The support line being placed at 31,345. Second support line at 30,625. It's been a while since we have revisited chart, so some readjustments are necessary here. And the final support line being placed at 29,690. Let's also show the direction and its limitations. So we have an upward movement which intensified. There you go. So practically the upward movement of the index has started around the 17th of June. That's the 4-hour chart of Dow Jones. Note how the slope has moved more decisively upwards, and that happened practically around the 23rd of June. And now the 27th, Monday, it's still on an upward motion, aiming for the 31,955. We have, though, an RSI indicator which has surpassed the reading of 70, which may imply that the index has reached overbought levels and may be ripe for correction lower. I would like to see, though, also what the Bollinger Bands are saying about this. And the moving average as the medium, 2 standard deviations for the upper and lower boundary. And we can see how the price action actually has hit the upper Bollinger Band, which may imply a slowdown of the rise. We'll have to wait and see, especially in the American session today as it opens. For the time being, though, the upward movement is continued. We maintain a bullish outlook for Dow Jones as long as it remains above the upward trend line which has formed. A correction, though, should not take us by surprise, or even some slight stabilization, given that the price action has surpassed the reading of 70 in the RSI indicator below our 4-hour chart, and the price action has also reached and sometimes even surpassed the upper Bollinger Band, which may slow down the rise somewhat. Quite nice. Should the bulls maintain control, I wouldn't be surprised to see it breaking above the 31,955, which has provided resistance here, support here. Higher than that, we note the 32,760 with a peak being marked here and here. And the highest level would be the 33,470. To the downside, and should the bears take over, as a first sign of a changing trend, I would expect the price action to break the upward trend line mentioned, and that would require also a clear breaking of the S1, the 31,345, and for the index to start actively aiming for the 30,625, providing support here. In an extreme bearish scenario, I wouldn't be surprised to see the price action starting to aim for the 29,690, which provided support for the last time around the 17th of June It's a nice cap of the downward motion of the index. Let's have a look now at Euro USD. Euro USD, which has been on the rise, but let me adjust the levels, has not reached the 1.06. We tend to maintain our bias for a sideways movement for now. On the other hand, to call in the bulls, I would require clear breaking of the R1 1.06. Please note that the RSI indicator has moved upwards and is now considerably higher than the reading of 50, implying a rather bullish sentiment, as it reflects the upward movement of the pair practically since Friday, maybe even Thursday. Let's check. Yep. That's since the 23rd of the month. That was practically when the wide drop here was on Thursday, when we had the release of the preliminary PMI figures for France, Germany, and the Eurozone for June. And the readings were pretty lower than expected, creating some worries about the outlook of Eurozone's economy. But since then, it seems that the price action has recovered the ground lost and is now aiming for the 1.06. Once again, though, note how the R1 level has provided resistance here, here, and here. So we would expect a clear breaking of the 1.06 to start signaling a bullish trend. That would also allow us to form an upward trend line. On the flip side, for a bearish outlook, we would require clear breaking of the 1.0480 and start aiming for the 1.0355, a scenario which could be possible, but it would have to take a wide drop for the pair, which for the time being does not seem to be probable. So for the time being, we maintain bias for a sideways movement. However, bullish tendencies could be present for the pair. Let's have a look now at the pound and cables for our chart. A similar picture. Note how the price action practically respected the 1.2325 resistance line, which proved its worth once again during today's European session. Note that the level had provided resistance earlier on today, as well as around the 21st of June, and there was a support line back in the midst of May, around the 18th, 19th of May. We tend to maintain a bias for a sideways motion between the 1.2325 and the 1.2175. The RSI indicator below our 4-hour chart rose a bit, put some distance between its price action and the level of 50, yet has started to correct a little bit lower, reflecting the drop of the past hours. For a bullish outlook, we would require clear breaking of the 1.2325 and start aiming for the 1.2470. On the other hand, note how consecutive the pair has started to form higher peaks and higher lows. So the bulls seem to be still present, and the pair could be breaking the 1.2325 and actively start aiming for the 1.2470. Interesting. Let's have a look now at USD JPY. Also in sideways motion. Let me readjust the levels just a bit. There we are. So the price action has been moving sideways. We maintain our bias for sideways movement between the 135.60 resistance line and the 134 support line. The RSI indicator is just at the reading of 50, also implying a rather indecisive market. However, we have to note that it has moved on a sideways motion as well, yet below the reading of 50. It's characteristic also how the price action has remained between the 20 moving average and the lower Bollinger Band. But once again, rather stable. Should the bulls take over, I would expect the price action to break the 135.60, which provided resistance here, and start aiming for the 136.75. And should the R2 be broken, the next possible level we note for the bulls would be the 138.30. To the downside, we note the 134 support line, which provided support here. Even lower, we note the 133, which used to be a resistance line, however, also provided some support here. And lower than that, we note the 131.50, which practically reversed the downward motion of the pair on the 16th of June, forcing it to an upward motion before it corrected lower and stabilized. Note you that USD/JPY is near a level not seen since, that's almost 2002. We are talking about 20-year high levels. The previous peak, though, this here, which was marked by the 136.75 resistance line, hadn't seen any price action since 1998. So overall, USD/JPY continues to trade at very high levels, and that may be causing the pair's bulls some cold feet here, some hesitation. But the market is what the market is and could move to the direction at any given moment. Should not be underestimated here. Let's have a look at USD CAD, Canadian dollar, which has been strengthening. And oh, that's nice. Note how the price action of the CAD has been dropping since the 23rd of June. That's Thursday. That was around 8 o'clock in the late American session. And it has been dropping, breaking the 1.2970 and actually bouncing on the 1.2865, which was our prior support line. Held its ground beautifully. Nevertheless, should the bears maintain control, given also that the RSI indicator is below the reading of 50, just above the reading of 30, and the downward motion is to restart, we would expect the price action to break the 1.2865 and start aiming for the 1.2730. On the other hand, we must note that the price action's downward movement has hit the lower Bollinger Band, which may imply some stabilization, even a correction higher, hence the last green candlestick we have on our chart. And should we see a correction for a bullish outlook, if a correction higher could go as high as the 1.2970 in our opinion. If the R1 is broken, we're no longer speaking about a correction, yet we would be speaking about a bullish movement. For the time being, though, I would expect the downward motion to continue. I would require a clear breaking of, see the row of lower peaks being formed. I would like to see the price action somewhere here. That would be forcing me to switch in favor of a sideways motion between the 1.2970 and the 1.2865. That's at the initial stages until the market decides on the direction of the pair once again. Let's have a look at the Aussie. AUD/USD. Tight range bound movement respecting the 0.6950. Look how it was starting to break higher, and actually the price action has broken the downward trend line clearly now. So we switch a bearish outlook in favor of a sideways motion initially between the 0.6950 and the 0.6850. Now, before that though, we would like to note also that the RSI indicator remains near the reading of 50, which more or less also tends to imply a rather indecisive market. Note how the RSI indicator below the 4-hour chart has been revolving around the reading of 50. It hasn't put much distance to either direction between the reading and the actual level. Another indication for a sideways movement. Should the bulls take over and for a sideways bias to turn into a bullish outlook, we would require a clear breaking of the 0.6950, which provided resistance here, here, support here, resistance here. So it's a well-tested level and should not be underestimated. Higher than that, we note the 0.7035, providing resistance here, support here. Even higher, we have the 0.7150, which used to be a support line. That was around the last days of May, beginning of June, the first week of June. To the downside, should the bears take over once again, we would expect AUD/USD's price action to break clearly the 0.6850, which provided support here and here, and start aiming for 0.6730. Okay, let's have a look now at USD/CHF. Let's make some readjustments here, as the price action has moved a little bit lower. Yet we have to note that despite a false break, attempts to break 0.9550 and the big picture held its ground. It's characteristic that the price action moved a little bit higher. On the other hand, we have to note that the price action is creating lower peaks and lower troughs, 1, 2, 3. So we may see the price action regaining its bearish momentum, in which case we would expect the price action to break clearly the 0.9550 and at least reach midways between the 95.50 and the 94.55 before starting to actively aim for the 94.55. Yet we have to note that the S1 level provided support not only on Friday but also here and here. So it was well tested once again and should be kept under watch. Should the bulls take over, we would expect the price action, actually would require the price action to clearly break the 0.9640 and start actively aiming for 0.9765. Once again though, we maintain a bias for a sideways motion. Mind you that bearish tendencies could be present given the lower peaks, lower troughs, and that there are indicators between the readings of 50 and 30. Let's have a look now at USD/TRY. Whoa, that was a downward movement. That was interesting. We have discussed this in the fundamentals as well. Note the choppy wide trading of USD/TRY practically in the past 2 days. And you can compare it also with the low volatility which was evident in the past movement of the price action. Practically, the downward motion forced the price action to break below the 1.17. Let me readjust the levels just a bit. Tags. Going to be hunting for a new support line shortly. But nevertheless, the 17 has been broken. And actually the 16.40 was also tested, but the price action quickly went higher. We note that the 15.74 was not reached. So we need a new support line. 17 becomes now resistance level. Red. Let's readjust this. 1830. 2. Let's have a look at 17.60, which is the second resistance line. First resistance line now is being placed at 17. First support line being placed at 16.40. Second support line at 15.74. Plug these in. Okay. Mind you that we have a resistance line here, but I would be looking for something nearer to the price action. Something here. Note how the candlesticks here were bouncing on this level. That would be the green. 15.20. A little bit higher. There you go. But to tell you the truth, I'm feeling a little bit uneasy with the third support line. Let's see if there are any more touches here. Okay. But that's pretty close to the price action. So I'll keep it. If we drill down to the 1 hour chart, okay, the bearish movement has been broken. You can see how the price action dropped, forming a deep low, correcting a little bit higher, once again forming a deeper low, stabilizing somewhat, forming a third deep low, and then corrected far higher, practically with the new high being higher than the previous one. So that would be an indication that some stabilization is taking over here. It's also interesting to note that the RSI indicator has reemerged above the reading of 30, but the bears could still take over. For the time being, I would expect the stabilization of the pair between the 17 resistance line and the 16.40 support line. On the other hand, though, we may see some bearish tendencies once again reappearing. Note how the Bollinger Bands practically came out of reference as the margins widened on either side suddenly and substantially. Should the bears take over, I would expect the 16.4 to be broken and for the price action to start aiming for the 15.74. On the flip side, should the market not be so convinced about the measures and the new lending order, which would practically force businesses, Turkish businesses, to convert their reserves in hard currency into pounds, into lira, we may see the price action once again decisively start moving higher, breaking the 17 resistance line, and start aiming for this 17.60 resistance level. Let's have a look now at WTI. WTI's price, which has risen, broken the downward trend line, actually broken also the 105.10 resistance line, and has now moved above it. Let's find a new resistance line here, placing it somewhere here with this levels, also here support and here. So it seems to be taken notice of. That would be the 113.80. Red, please. Let's make the readjustments. This one will turn green as it has become now a support line. And we make a start with the 97.90. Second resistance line, the 101. And 25. First support line being placed now at 105.10. First resistance line, which was tested here, being placed at 107.55. Second resistance line being placed at 110.85. The last one, the last resistance line being placed at 113.80. Note the bullish tendencies of WTI's price action. On the other hand, the stabilization seems to be taking place as the commodities price seems to be respecting the 107.55. Also note that the RSI indicator is running along the reading of 50, implying a rather indecisive market. So both of these tend to imply that some stabilization has started to take place. I would be expecting the price action after breaking the downward trend line, which has been guiding the commodities price, that was since the 14th of June, to stabilize between the 107.55 and the 105.10. Should the price action actually be able to break above the 107.55 and start to aim for the 110.85, that would be a sign of a bullish trend. And in such a case, we may be able also to form an upward trend line guiding the commodities prices somewhat. To the downside, should the bears take over, we would expect the price action to break the 105.10 and start aiming for 101.25. That should be about it. You can see that you guys want to have a look at another US stock market index. Okay. Now we have talked about Dow Jones. Note the upward movement. Let's have a look now at NASDAQ. Pretty similar, right? Let's widen this a little bit. An upward movement which has been steeper. The price action has broken above the 12,100, so that's now being turned into support line. Let's have a look to see if we can find a new new third resistance line. Day chart. Okay. Drilling back to the 4-hour chart. Zooming out. This should be it. You can see how this level was tested once, aimed for, retested twice. That would be, we're always talking about the 4-hour chart. On the 26th of April, aimed for on the 28th of April, retested on the 5th of May. Yeah, I'm keeping this one. It's a little bit wide, I know it, but given the wide movements here and here, you cannot neglect this. It's the 13,555. Let's place it in red as well. Let's realign. And we make a start with readjusting the labels at 11.0.30, final support line. The 11,490, the second support line. First support line now being placed at 12,100. First resistance line being placed at 12,440. Always talking about NASDAQ here. Second resistance line being placed at 12,935. Final resistance line being placed at 13,555. That's a 5-2. So we tend to maintain a bullish outlook as long as the price action remains above the upward trend line. However, note that the RSI indicator has surpassed the reading of 70, which may imply that the index has reached overbought levels, may be ripe for a correction lower. So I wouldn't be surprised to see the downward motion breaking the pre-mentioned upward trend line and start aiming for the secondary level. Yet that could be treated as a correction still. It's still not a bearish movement. It will have to break also the second upward trend line in order for me to switch my bullish bias in favor of a bullish outlook. But should the bulls remain in control, I would expect the price action to break the 12,440 and start actively aiming for the 12,935. That should be it. From all of us here at IronFX, best wishes for solid trading.
When the markets give you money, it's a good idea to take it, because you may not get the opportunity again. Some traders take the market for granted. Some believe they know where the market is heading. That could be possible for the long run, but for a day trader, you never know what's going to happen. So you have to take every opportunity you can. Some opportunities that come to you must be dealt with accordingly. When you come across a high conviction trade, you must step on it and you have to go all in. And this requires courage. These opportunities are rare and you have to take full advantage of them to be successful. A lot of traders tend to be interested in things that may not serve toward their overall goal. If you're trading, your main priority should be to protect your money. Even if things go completely wrong, you still have to continue. Traders are focusing more on how much they would like to make instead of keeping in mind how much they're actually risking. What if the unthinkable happens? Under normal circumstances, you should expect the market to move against you and test you. Are you prepared for the worst-case scenario? My experience tells me that you should be ready for a bad day. And whilst it isn't a great thing to deal with at the time, being able to embrace it as a learning moment will make you a better trader. So a loss is particularly a win if you're able to learn something from it. I'm here to give you some ideas on how to accomplish a big goal. First, set your target and time it. Make sure you're realistic and calculated. State how much money you want to make and when you will acquire it. Be specific. Now turn your attention to a big target you have accomplished in the past. It could be a trading winning stake or a single trade winner. Identify the circumstances that contribute to achieving those. What were you trading? Was it moving higher or lower? What direction did you take? Think about what happened then in detail and break it down into sections. This will help you identify the circumstances that worked for you. Once you have all the information down, think of how you can use them again to your advantage. This will help you create a vision in your mind, which will then help you go out and perform. Use as much detail as you can. Envision your trading as vividly as possible. The more clearly you can see in your mind, the easier it will be to manifest. You still have to be realistic though.